You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from the OptionsInsider.com, as well as from the ever-compelling, ever-exciting, ever-fascinating, ever-expanding Options Insider Radio Network. And where can you find all of those excellent shows? Well, no shortage of locations, including the mothership, the OptionsInsider.com. We have all of that there readily available for you. We're even playing around with some new placements there on the homepage, make it easier for you guys to find the newest addition to the network. Whatever's playing that day will be up there on the homepage very shortly. Of course, you can also go to all of our partner sites, as well as to all the leading audio outlets, iTunes, Stitcher, Aha Mobile, all those fun places, as well as our mobile app, available for iOS, Android, and the Fire OS, the ever-growing Fire OS. And you can use that app to download all of the episodes of the Option Block. I would probably discourage you from doing that. That's like 300 some odd episodes now. It's many, many hundreds of hours of content there. So maybe you don't want to download all of them. Maybe you stream a bunch of them and you download a few, your favorites, your choicest episodes to listen on the plane or the train. And while you're done, or after you're done doing that, you say, you know, I don't really agree with that Andrew guy at all. He's kind of crazy. You let us know. Send us your questions, your comments, your feedback right there in that comment, that email, that feedback tab right there. You can shoot us a tweet, shoot us a Facebook question, shoot us an email, even leave us a voicemail, all baked right into the app there. Makes it really easy for you guys to have your say here on the old All-Star panel. Speaking of the old All-Star panel, joining me on today's panel, starting off with the man of many hats and only one nickname, even though some other people have made runs, I will say, Alex, at the Viceroy. They're kind of angling for the Viceroy title. We are joined by the one and only Mr. Alex Jacobson, a.k.a. the Viceroy from Options Express by Charles Schwab. Alex, welcome back to the show, sir.
Mark, it's good to be here. A little bit of a quiet day in the market, and the folks who want the Viceroy nickname, when I hang my hat up, they'll be the first to know.
I will say this. I'll give you a hint. It's one of your favorite people. I'll just leave it like that. And he's been on this show before, too, so I'll even narrow it down that much. But he said the other day, hey, I'm gunning for that Viceroy name. I like that. So there you go. People battling, lining up to become the Viceroy. And speaking of a man with a much sillier title, we know him as the Rock Lobster, none other than Mr. Andrew Giovinazzi himself, taking a break from the eternal options feast that is life in Maine to join us here on the old Option Block program. Welcome back to the show, sir.
It is fantastic. I mean, I swear to God, I almost, it's like I just talked to you not very long ago today somehow. I don't know. I feel like the Option Insider Radio Network and myself We're becoming like some sort of symbiotic creature, like on Star Trek. What were they, Tribbles or something like that?
Something like that, yes.
Some sort of symbiont. I don't know.
You are morphing, though. You are evolving into quite the little radio host. It brings a tear to my eye to see the way you've grown up on the microphone before our eyes and ears.
And I have to say, I do not quite have the voice for radio like Mark Longo does either. It's kind of nasally and annoying, actually, when I hear myself. So the fact that anybody listens to me at all, I find is a slight miracle.
Yeah, I still can't stand my own voice either, even though other people seem to like it. So apparently the network exists. So I don't guess it would exist if people really were annoyed by it. Drives me crazy, but c'est la vie. That's my own issue, my own cross to bear. And last but not least, listeners, we are joined by the ever tardy but ever faithful Uncle Mike Tusaw from RCM Wealth Advisors and RCM Asset Management. Uncle Mike, welcome back to the show, sir. It has been far, far too long.
It has been, and I'm excited about the months going forward and the shows with which we're to do. We're taking the road to episode 1000.
Yeah, we're cranking. Got a bit of a ways to go on that road, but we're a good way there as well, though. So I like to see the optimism there. Episode 1000, interesting stuff. We'll all be very gray-haired by then and long of tooth, but we may get there, listeners. We'll see. All right.
If the SP can get to 2000, we can get to 1000.
There you go. Wise words, sir. I think with those wise words, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. You know the drill by now, and if you don't, if you're brand new, it's pretty easy to figure out. This is indeed the portion of the show where we break down what was trading, what caught our eye in today's markets. And it was mostly unched for most of the session. It seemed to drift a little bit lower toward the close there, with most of the major indices closing down about 1/4 of a percentage point or so, but really nothing to write home about from a net movement perspective. S&P's down about 4 handles, the Dow down about 50, and the Q's down slightly on the day. Fixed cash taking a little bit of an upward jaunt, an upward sojourn, up about a third of a point or so to about 12.15 on the day. So not a heck of a lot really to catch our eye from a broad perspective, but still some stuff cooking. So perhaps we'll start in fancy hat land, a.k.a. the Viceroy land. Mr. Alex, what, if anything, caught your eye in today's whirlwind, myriad, maelstrom of activity, sir?
Only 2 names really stuck out today, and I think the desk had to be quiet because Grigas and I spent a lot of time IMing each other today. GoPro and Twitter were the only 2 names that really stood out. And the desk is starting to get a lot of questions about Alibaba. So maybe we'll talk about that a little later in the show on when options will list on it. But overall, a relatively quiet day. I know Mike and I are now economists, and 10-year trading under 234. So rates are going lower. People are buying the bond. That's really all that was going on.
Yeah, you want your Alibaba, you just buy some Yahoo, right? You're done. Yahoo, Alibaba by proxy.
Yeah, that's the ARB.
All right, and since the Skype gods are smiling upon him once again, Uncle Mike Tusaw, what caught your eye in today's activity? A little bit of love for Apple. Apple still reaching, seems like every day, a little bit of a new high for Apple. So first off, since you weren't here on Monday, give us your week that was. You weren't here when Apple hit the big 707 level that you were waiting so with such bated breath for. So tell us what happened when you hit that level and what you're up to now out there.
It did. So step 1 of adding to the position, so to speak, I have hedged Apple traders, and I have Apple traders that are more for being aggressive on it. So in the hedged Apple traders, I just rolled up the puts up to the January 92.86 level. So for now, I'm not adding anything for financing the hedge as of yet, but it is in the plans to do so shortly. In the meantime, what I did is a means of exercising my bullishness of Apple going above the 101 level. In the Sept week 1, 195 put spread, and just looking to get a little bit of juice from that. And so from there, the next step, I'd like to see it stabilize still above the 100, 101 level a little bit more, and then it'll start to buy some calls. But in the meantime, I'm fine missing out on a little bit more upside movement in Apple. We've increased the deltas, don't get me wrong, but the next step of this is that if we get a little bit more on here, we're going to hopefully ride the momentum higher with some additional calls.
And what else is cooking out there in RCM land? I know you like to play the metals. Been some interesting activity watching of late, and from a vol perspective at least out there in gold, not so much from an underlying perspective. You making any moves in the big metals?
Yeah, in gold right now what we're doing is I just recently closed out a put spread. GLD was at 123 last week and came up a little bit, and I actually got out of the put spread yesterday on the way up. And just with silver at this point, we're taking a small position on it. And I'm doing something that it's very uncharacteristic for me, but I think it really is the best way to play silver now, and that's just own the underlying. I'll be honest with you, I'm getting pains in my chest from just saying such a thing, and so that's how we're playing silver at this point, but we're monitoring it closely. I know it's kind of odd to say that, but we're just simply long underlying with no option. That's the only position I think that I have and that doesn't have any type of option exposure to it in one way, shape, or form.
So you realize this is now your final appearance on the program here. Now that you're a long underlying man, we can no longer be associated with you.
I know, but I've traded enough silver options through the years to make up for it, though.
You get 1 week grace period. I want some options back in that account soon, sir.
Yes, sir.
All right. Thank you for that, Uncle Mike. And Mr. Rock Lobster, I know you're quite the busy fellow over there, cranking away on some boot camps and some client mentees and some pit chats and some pit reports and all the other fun stuff you guys have cooking over there. What amongst all that activity really caught your eye today? One more time. What amongst all that stuff you're doing over there, what was the topic du jour? What caught your eyes? What underlyings were really making the rounds over there today?
We had a couple. One mostly was just Europe's down 1% on the opening this morning on the Russian invasion, whatever. Because Europe obviously is close and they're nervous. Our equity market, I think we were down probably about 0.5%. And then we rallied right back almost up on the day, I think. It's crazy. Like there's nothing that can stop this market. Every drop is a buying opportunity, and Russians invade, nobody cares. It's like, okay. So by the way, I'm about as long as I can be. Because I just don't think anything's stopping the stock market. But that's what we were watching. The second thing, actually, we did some interesting stuff in GoPro. There was, because there's a massive short squeeze going on in that thing, it's a little fun. So we came up with some interesting ratio trades. We get actually net long contracts to show people how to kind of deal with a hard to borrow like that, because you don't want to really stand in the way of a stock that's had the potential to just get squeezed, to have the life squeezed out of the shorts, as it were.
Always fun stuff. You're at GoPro up about 7.5% today, or $3.40, nearly $3.50, up to nearly $49. Quite the little pop up here of late. The shorts get a wee bit of a squeeze out there in GoPro land. All right, and that's going to do it for the old trading block. And now let's keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, listeners, you know what that funky music means. It's time once again for the Odd Block, the portion of the show where we analyze and determine and study very deeply and intently the unusual activity that's going on in the options market today. And our unusual activity today is so hot off the presses, so fresh, that is coming in as we speak, listeners. So I'm just going to toss it over to the Rock Lobster and let him tell you exactly what caught his eye today. I think, Mr. Andrew, I'm feeling I'm feeling a little financial, a little bankish, if you will, to create my own adjective there. So maybe we'll start in the realm of Wells Fargo. How does that work for you?
That sounds okay. A birdie must have told you.
Yes, those mighty birdies, mighty minions.
You do have the. I wonder what that birdie looks like. This is, I guess, because we do have Tucson here when we can hear him on Skype. This is like this could even be a trade that he might do, maybe. I don't know. In Wells Fargo, the stock went down a little bit today, 18 cents or something, closing at 51.15. Wells is at the top of its 52-week range, though. Who would have known Wells Fargo in the financial crisis? I think you could have bought it for $13. Now it's trading 51. I guess we had a customer that said, well, I don't want to pay 51. I want to pay less. So they sold a boatload of the Wells Fargo Sept 50 puts at 20 cents. They sold 28,000 of them, actually. So ADV in here is around 31,000 contracts, but the open interest on this is only 4,600. So definitely an opening seller wanting to buy, basically just wanting to get along the underlying, not willing to pay that overinflated market price. They want to sell puts and buy it at the cheaper price. Which is probably the best way to think about selling puts.
This guy's not playing around here. This is some paper.
I mean, that's like, I want to own 2.8 million shares, basically.
I mean, yeah, he's not playing with any strikes. He's not going like 5% out of the money or anything like that. Like you usually see with these put writers. He's just bam, next month, bam, next strike out of the money, bam, 30,000 contracts. Let's go.
Gimme. I want to own this. So, like I said, maybe this could be a Tucson trade. We know how he could be aggressive for things that he might like. Implied volatility here is relatively low. So this is just a customer like, I want to own this stock. That's it. End of story. And I'm just going to keep selling puts under the money, just out of the money until I get it. And in the meantime, I'll just keep collecting his, 20 cents, 28,000 times is a lot. So he'll just take that money.
I'll take it. Yeah, that sounds good. Tucson, you're right. This does have all the hallmarks of the beginning of a Tucson era wheel of fun trade, I believe they call it over there.
I think so. So that is the Wells Fargo wheel of fun. Not as fun as buying the stock at like $13, but still it's pretty fun.
As they say in that famous movie, that'll do, pig. Andrew, that was a good rundown in the financials, but I'm feeling a little bit of a whist for the Orient. Take me to China, sir. I want something Chinese today. That's what I'm feeling. I'm feeling hungry for Chinese. Exactly.
And this is a name I've never heard of, but is now officially on my radar screen because it's nice that they're listing all these Chinese ADRs because it makes trading options so much more exciting. This is a company, I think, that's new to the odd block, 21 VNET Group, Inc. Have we traded that VNET?
I would remember that name if we had done it before.
I think so, right? So that would stick in your head. And this is a name that does 261 contracts per day. It traded a little bit more than that today, at least on the OCC22 puts. I have volume on the day on these puts around 3,100. Open interest on the strike is 2,000. And what we profiled was 2,500 of the VNET OCC22 puts trading for 55 cents. Volatility up here is basically up, between 3 and 6 points, depending on what term is. So it's a name, doesn't trade a lot. All of a sudden, buyers came in to just buy, buy, basically everything. They bought calls, they bought puts, but mostly puts on like a 10-to-1 ratio. Buying the Sept 22 puts and what we profiled is the OCC 22.5 puts. At the time, they lifted the offer at 55 cents. They're now 55-cent bid. So it looks like there's a lot of speculation that old VNET is going to, go the way of so many of these Chinese ADRs and trade at a much, much lower price. So we'll see if these customers are right. But for the most part, it just looks like opening put buying where there was actually little open interest to speak of prior to. So
seems like premium buying in Chinese-related, whether the technology or financial-related names, is pretty much the trade du jour these days.
Right. There is not a lot of writing.
No, not at all. Everyone's just gobbling up all the premium they could buy in all these names. And it's a good thing we have more ADRs from China. You're right, because those biotechs getting a little boring, getting a little sleepy. We need something with a little bit of pizzazz. And here comes this wave of Chinese ADRs to really add some shine to the old odd block.
Exactly. And I'd be interested to see what Alex has to say if he has Chinese nationals as OX customers, coming in on the opening and trading here, because we probably have, I think we have a little bit more robust of a equity option market than they do over there. But again, I don't know that for sure. Although we do have clients that are trying to translate option pit education stuff into Chinese, into Mandarin. So there's definitely interest over there, no question about it. But so we'll see what happens with this VNET. The stock was on a bit of a run, and it's trading close to the 52-week highs. Not quite up there, but it's not at the bottom of the range. It was like a $12 stock. Now it's almost a $30 stock. So there's either heavy protection or, and they just reported earnings. So why they're jumping in to buy the juice now, I find very odd. Like, why now? Why buy it after the earnings when you could have bought it all before the earnings?
They got the memo. It's a juice palooza in every Chinese name. Get it while the getting's good. It's a newsletter. We talk about newsletter trades a lot. Someone clearly put out the buy premium in all Chinese names newsletter, and they're just the lemmings following suit, a little bit late to the party, but they don't care. They have to get the premium, right?
I guess so. And they're paying up for it. Let's just put it that way.
All right, Andrew, we've been to China. We've been to the banking sector. I'm thinking, what would round out this nice buffet here we've had on the option block? What would be a nice palate cleanser, a little bit of a sorbet? And I think, when I think rounding out the old odd block, I think semis. So let's get into some semis and dive into some action. Perhaps in one of our old, it's been a while since we talked about this guy, I believe, but EZCHIP.
Yes, the lovely, always fashionable EZCHIP Semiconductor. If I open a restaurant in Maine, it would be called the Lazy Oyster. That's the name for the restaurant. It has a lot of names.
That's a strange glimpse inside the mind of Andrew Giovinazzi.
Exactly. I mean, when you think of an oyster, how much does it move, right? All oysters.
Maybe it should be the hyperactive oyster and really blow people's minds. They'll have no idea what to expect when they walk in the door, which is what you want in a restaurant. What is this place? What do you sell?
But this EZCHIP, everybody seems to like this EZCHIP. It is trading near the upper end, as all semiconductors are, because that's the rule now. Everybody used to hate them. Now they all love them. A big jump today, up $2.50, almost 10%, a little over 10%, getting near the 52-week high. And this was a stock, last year at this time, actually had like a 20% drop. And now today it has a 10% gain. So it is definitely prone to very, very, very volatile moves. If you take a look at it, EZCH, today, right early in the morning, I profiled the buy of the AAPL 24 Open interest on the strike is a whopping 14 contracts. This buyer paid $205 for 649 of the AAPL 24s, which at the time were just slightly in the money. Those calls closed today for, I would always say, Mark, guess the price, but marking around $4.20. So the customer in one day got basically, they hit a home run, or actually they got a double. They got a double from 205 to 420. Not too bad on 649 calls. $2, 640 times is not too bad. And as everything in here too, bought paper everywhere. So this is a stock that's relatively low vol. It's actually, the vol feels a little underpriced to me, but now it's the October's trading around 38. The volatility was up 7 points from 31 to 38. So huge jumps in vol across the board for this thing. I think this is the day just when the liquidity providers got run over. Vol spiked, and there was just buy on everything. Options trading all the way up to the 31 strike in September, 31 strike in October, $3-4 out of the money, and just buying everywhere. So on a bullish day, this is just lots of bullish paper buying up the calls. Crazy.
Who'd have thunk it? Buying calls in a semi. It never happened before here on the Odd Block. I'm flummoxed. I'm amazed.
I know. I think people are getting smarter, though. They're buying them more just in the monies and then watching it go. So I haven't seen actually these calls close. So somebody is, it looks like they're going for a ride. They, a lot of these call buyers came in early, scooping these things up. So, and they didn't get out yet.
Going for a ride in your semi. Maybe a good episode title. Who knows? We'll see.
Going for a ride in your... How about the Lazy Oyster?
The Lazy Oyster is pretty good, too. It's equally confusing and confounding and intriguing all at the same time, which I suppose is a good title, I guess, at the end of the day.
Jump on the boat with a 10-year note.
Oh, there we go.
There we go.
I haven't used that one before, I don't know.
That's a good segue into the next block, a.k.a. the Big Hat Block, a.k.a. the Express Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you know what time it is. It is time for the Viceroy to don his fanciest of headwear and proceed to take us behind the scenes into the land known as Options Express by Charles Schwab. Alex, you said it wasn't the most active of days of that. I know there was a lot of hot debate about cars over there today. So anything you can share with us on that front? What should we be looking for in the new model year? What brands should we be leaning towards when we're making our purchasing decisions in 2014 and beyond?
So I'm not allowed to give car advice, but John Grigas runs our trading desk, and John and I are both car enthusiasts. So today we were debating the merits of an older BMW M5 versus the Cadillac CTS-V. And I have an M5, and Grigas always wants to drive it. And I say, I'll bring it down. And he says, well, I don't want to buy it. So I say, well, John, it's not for sale. You want to drive it, it's fine. But that kind of tells you that things were just not that overpoweringly busy today for the desk. It was clearly a quiet day, only a couple names popping up. The futures guys said they were doing some business in interest rates, but that makes sense. And as Andrew pointed out, the market was down out of the box until Europe closed. It was down on the Russian-Ukraine news. So that looked like it was selling coming out of Europe, and they were selling equities and buying U.S. bonds. And then as soon as Europe closed, we popped off the lows of the day, and it looked near the end of the day like we might even get to the unchanged level, but we didn't. We did sell off a bit. I noted it's the first two back-to-back down days for the NASDAQ this month, to give you a sense of how good August has been. One thing I've been doing in the Express Block is the folks at Schwab have asked me to continue talking about the fact that we're moving towards the 3 and 4 leg trade ticket coming onto the Schwab Street Smart Edge and the mobile platform. The target date now for it to appear on Street Smart Edge is next Friday, September 5th. But keep in mind, with technology, it would not surprise me if the date slipped a bit. And in talking to some of the technologists today, I reminded them that you normally don't like to do things that close to an expiration. And they kind of looked around and said, it's not an expiration. And you say, okay, but, there is an expiration now every Friday. And they were like, that was one of those, oh, no moments. So I expect people will see it in the first couple weeks of September, and mobile customers will see it 1 week after it releases on the Street Smart Edge platform. For those folks on Schwab.com, the internet platform, expect to see it towards the end of 2014 or the beginning of 2015. So exciting news, because 3 and 4 legs right now, if a Schwab customer wants to do a 3 or 4 leg, they either have to break it up, which is risky because you'll be legging into the position, or they have to call the desk. And, as we all know, we've talked about, some people don't like calling the desk. Some people don't like the fact that at Schwab, calling the desk costs a little bit of extra money. Not the case at OX, but 3 and 4 legs coming to the Schwab platform.
Good stuff, Mr. Viceroy. Looking forward to that. I know a lot of people are very excited about that. I always mention here on the show, I feel bad sometimes when we're talking about all these cool tools and gizmos and things that we can use and strategies we can implement, and the guys over there at Schwab are saying, hey, what about us? So it's nice to see that they can now join the party too. So welcome aboard, Schwab customers. Meanwhile, we're going to keep on rolling right on into our next segment. We're going to mix it up. Uncle Mike couldn't make it on Monday, but he's here today, so we'll do some strategery today. Yes, it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, you know what time it is. It's time for Uncle Mike to come on down from the mountains, smoking jacket and stone tablets, and perhaps if he's feeling frisky, a bubble pipe in hand to dispense some options, wit, and or wisdom. Uncle Mike, in between hits on that bubble pipe, sir, what are you bringing to us? What wisdom, what knowledge are you going to drop on our listeners today, sir?
A couple things, actually. The first one is I kind of want to give a little bit of an update of some of the things that we've been doing in our SPY positions. And then I want to go through just a reminder of something that happened to me, but I want to just remind a lot of our listeners in terms of how spreads are quoted and why it can be an important issue. So let's say that the other day I was getting out of a spread, closing out a vertical put spread in GLD. And so looked at the spread quote, and it was 9 cents, something like that, and so put in the order to get out of it. Now, eventually I did get out of it, and it wasn't an issue at all. But nonetheless, it wasn't filling right away. And so just the reason why it didn't fill right away, and I thought this would be a good thing to bring up for the show, oftentimes, depending on who your broker is, the spread that it's quoted, if it's a two-legged spread, it's based on the NBBO. It's based on the best possible price of each leg of the spread. So exchange number 1 was the short leg, and exchange number 2 was the long leg. Now, some brokers, they do have some type of a smart thing to where they maybe Alex can tell us a little bit more about this. They may have some type of thing with which they can cross exchanges and go immediately from one exchange to the other. But the thing with which to recognize on it is that if you're not getting filled right away on your spread, it might be because of the fact that the broker that with which you use does not have the ability to fill it across each exchange. And so if it's a small enough dollar amount, one thing with which you may want to do is just get out of the short leg of the spread first, and then immediately get out of the long leg, depending on what the prices are and if your risk management fits the bill and that type of thing. In this case, I believe the short leg the short put was at 12 cents in terms of what we could get out at on the offer, and the bid on the long leg was at 3 cents. And so 9 cents is what we were trying to get out of as a whole on the spread, but it wasn't filling right away. It did very shortly thereafter, but right away it did not, and or I shouldn't say, we eventually got out of it. But nonetheless, as you're doing this, make sure you have an understanding of how your broker quotes spreads, because if this is something with which you're getting into and getting out of very frequently, you need to be aware of this. And so I thought of this show when that was happening a couple days ago. Now, the second thing that I want to talk about today in the strategy block has to do with understanding your rules in terms of risk management. Right now, since the S&P is around the 2,000 level, last week I rolled up our long calls and our long puts on SPY, meaning that the long call that we were gaining some cash on due to the market going up, wanted to protect some of the profits. With volatility being considerably lower now than it was when we got into this, we decided that it's time to be a little bit more conservative with it. So we rolled up to the February 199 call where we were in the October 190 call. We rolled up to the February 199 call. And the reason for that is that at this point, yes, I know it's being an at-the-money call option, but they're pretty close to being at the money anyway. But volatility is low enough to justify that, in my opinion. And our plan is, like we've always done, to sell some spreads to finance the cost of it. But we're also going to be very nimble in that if this market starts going down, I'm not going to be hesitant to get out of it. A wise man once said, there's never been a better time to sell any of your S&P positions than right now. And so with that in mind, yeah, we're making new all-time highs. And yes, I will be honest with everybody. I am still bullish. I think we are going to continue to go higher in the marketplace. However, there's just an old trading adage of never let a winning trade turn into a losing trade. And so with that, what we did was we lowered the delta to the probably the mid-50s. And by doing that, we took some profits off the table, and we're going to continue to go higher, hopefully. But if we start to go lower, we are prepared for it. So continue to follow your rules, even when you are on a winning trade. And that is the strategy block for today.
All right, sir. Thank you for that. And now, because it is Thursday, we'd be remiss if we didn't give you guys a chance to join us here on the old All-Star panel as well. So without further ado, let's dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, listeners, like the man said, this is the portion of the show where we read your tweets, your emails, your Facebook questions, your website comments, all that good stuff. We love to hear your feedback. Seems like a lot of you guys are taking to heart that call we put out a few weeks back, or maybe a month or so back, where we said, hey, send us your trades and what you're putting on, and we'll talk about them here on the show. A lot of you guys taking us up on that. Starting off with a question here from Dr. Lawrence. He writes, could you comment on a trade I did that was inspired by your talk about collars? Well, I'm glad we could inspire someone here on the old option block program to do something positive instead of horribly destructive. He goes on to write, I own Apple at split adjusted 26. Well, hats off to you, sir. You're pretty much done right there. You win. Right. He goes on to write, I bought the Jan 16, so Jan 2016 listeners, $80 puts for $450. So if you're playing the home game listeners, he's long from 26, Apple over 100 now, and he's got the 80 puts for $450. Not a bad little do. I then sold the Nove 120 calls for $1.05. I've got many months to sell calls to pay for the puts. I really don't want to sell my underlying, so I figure I'll roll up and out if it goes up 20% in the next 3 months. I'm content with the downside protection and will roll my long put when the Jan 17s are listed. On the upside, I figure it can't go up forever and will roll up and out as long as necessary, but will try to continually sell calls to pay for my long puts. I'd love your opinions of my strategy. Thanks, Dr. Lawrence. Well, first off, again, congratulations on being long Apple from a level I'm sure many people are envious of, Uncle Mike probably included, though he was in pretty early as well over there. And we love what you're doing here. This is kind of exactly what we talk about here on the show. You've got a great underlying position. You've staked out where you're comfortable getting out of it in the underlying. You've bought the puts there to essentially stop yourself out there. And then you're doing stuff. You're writing the calls to actively pay for some of that protection. You found a decent month with a decent amount of premium. You're not doing weeklies or front months, which would also work. Obviously, be a little bit more work, a little bit more active. But in the long term, you would harvest more premium as a result. But there is a little bit more volatility involved in that, and some other risks, and a little bit more doing stuff involved in that. November is not a bad compromise on this front. There's other things you could do as well if you really wanted to go into the deep end of paying for this protection. Some of the stuff that Uncle Mike does on a daily basis, for example, you could, of course, turn that put into a put spread. Maybe if you're not that concerned about going that far beyond 80, maybe do 80-70, 80-60, something like that. Or you can do the two-saw special front month puts you're writing, and a lot of things you can do legging into time, put spreads to pay for that put. So now you have a short covered call and you have a short put on top of that long put. So you're paying for essentially, you have two income streams coming in now. Again, that requires a little bit more doing stuff on your part. I'm not sure how comfortable you are right now, but all things considered, if you just leave it the way it is right now, I think this is also a fine position. You roll the calls when the time comes. You roll the NOV calls when they get close to expiration, and you'll pay for probably a decent chunk of that put by the time that put comes due. So I think this overall is a pretty interesting approach. We like it. It's everything we talk about here on the show. Uncle Mike, I can see you champing the bit all the way through Skype because this one really hits home for you. What do you have to say for our friend here, Dr. Lawrence?
Oh, Dr. Lawrence, I like what you're doing as well. The only thing that I would really say to this is that, are you comfortable getting out of the stock at 120? And just one thing that I can tell you, if you want to just continue to play the Apple roll-up game, then this is coming from someone who has rolled Apple covered calls up more than I think I've set the Guinness Book of World Records for rolling up Apple covered calls on the way up. And I've gotten chewed out by many a client for doing it because, of course, it's my fault that Apple goes up too quickly. Nonetheless, but I have great relationships with those clients, and it's been a lot of fun on this whole Apple journey with which I've been on. So with that being said, one thing that I would consider as you're doing this is love the January 1680 put. So that's the level of protection with which you feel comfortable with. I think that's great. The one thing that I would consider is if you're really thinking that Apple can make a run up to the 150, 180 level, whatever, you may want to try to do something instead of the short calls of perhaps selling some put spreads instead of that. That will still get you some premium, and you'll still get a way with which to harvest the cost for the $4.50 on the Jan 1680 puts. Now, of course, the disadvantage to that is that you'll have double risk to the downside. So let's say you sold the 195 put spread. That would give you extra risk to the downside when doing it, but you're giving yourself unlimited upside. Folks, no matter what you do with options, there's no such thing as getting rid of risk. You're simply shifting risk. For example, buying a protective put on a stock does not get rid of risk. It simply shifts it from stock price risk to put premium risk. So as you're going through this, Dr. Lawrence, once again, I like what you're doing. Just the only thing that I can say to this is that if it does go above the 120 level, first off, congratulations, because that's a very fun problem to have. But second off, what I think you might want to consider is some type of alternative strategy to that if you really believe that Apple has a good chance of going above the 120 level with the upcoming fall announcements that we have.
Yeah, you're right. It's probably the only question mark to this strategy is I could see a lot of hemming and hawing when it gets up to 118. What do I want to do with this? Do I really want to sell it here? So he probably needs to decide that a little bit ahead of time, probably, before it gets to that level, which, of course, would be a good thing. We've said many times here on this show, don't be afraid to have your underlying called away at the end of the day. I mean, it sounds like he doesn't want that here, but if it happens, it's not a bad thing unless you have some tax situations to go along with it. Of course, at $26, he probably does. But that said, definitely bear that in mind. Mr. Andrew, I know you're probably pretty excited to talk to our friend, Mr. Lawrence, here as well. Or I should say, Dr. Lawrence. What do you have to say to our friend here, Dr. Lawrence, or as I call him, Dr. Larry?
Dr. Larry.
We're on a first-name basis.
I don't know. I don't know how much there is to tell. I think you guys kind of covered him. I don't know how much I can add to the whole, up and out. And, I think he's doing the right stuff. There's not much else to say to that. He's buying a put, vol's cheap. He's selling some shorter-term calls, and I think he's doing okay. I don't know what else I can do. What else do you do?
You'll get the old radio gift of gab one of these days, sir. It'll come to you.
You know what? I guess I was trying to have the gift of gab there, and just I could have invented something.
The gift of gab is quite fleeting, sir, that I found on many occasions. When you need it the most, sometimes it just isn't there for you.
I know. I did not requite myself well on that one.
All right, we got one more here coming in from Samuel, and he writes a good question, actually. We get this on a fairly regular basis. All right, and Mr. Alex, do you have anything to add here for our friend, Dr. Lawrence?
Yeah, and I think we've kind of micro talked about it, but essentially what he's doing is a collar with a long-dated put and a shorter-dated call, and we could debate forever, what are the right strikes, but that's the way to do a collar. I mean, that's just it. You buy the lead put, you move it up if the stock goes up, but you're playing the erosion curve. And as we've said before, most people with collars in their heart of hearts don't want to sell the call, but they are looking to finance the put. So you got to be nimble. But I also think there's a sub message in Dr. Lawrence's question, which is the amount of wealth that's been created in Apple. And I'm going to go off on the geeky end here again when he talks about having a $26 cost basis. And I told the story the other day about the neighbor in my driveway with the Amazon at the IPO. I did some research for one of our customers this week, and they had some Apple. They had bought in 1995 when Apple was on the ropes in a spot secondary sponsored by, get this, Hambrecht and Quest, a name that still exists but it's in a different form. And in the spot secondary, this was around 95, 96, 1,000 shares of Apple was $10,000. It was $10 a share. That 1,000 shares today, a share of Apple is now 980 shares. So if you do the math, 1,000 shares is, in round numbers, $10 million. So for everybody who always asks the question that alleges the stock market doesn't create wealth, buying great companies and managing the risk in them over time works for a lot of names.
Yeah, just ask Mr. B, Mr. Buffett. He's Mr. Long-term buy on a lot of these things. You made a good point about the structure of the collar there, Alex, too. I think I've talked about it before on the show. Dr. Larry, I hope you don't mind if I call you Dr. Larry. But I'll bring it up again. The OIC and OCC have done some great studies on this exact topic. They call it collaring the Qs. It started off with looking at the NASDAQ. They since have expanded it to pretty much every other underlying under the sun, commodities, other indexes, etc. And they show how that collar performs in a variety of market situations and also the optimal structure that they found. And what they found was optimal for them was a 6-month put with a 1-month call. Of course, that was before the advent of weeklies and a lot of other things, so there may be some wiggle room in that. Certainly what you're doing is not wrong. I'm just saying if you want to learn more about managing collars and optimal construction, I encourage you to check that out. You can find it at optionseducation.org or indeed theoptionsinsider.com. Or just search for collaring the QQQs on Google, your Google machine, and you should be able to find it. All right, one last question here coming in from Samuel, yeah, let's do it one more time. One last question coming in from Samuel, and he writes, I'm really enjoying your website as a trader. I read it every day. Oh, thanks, Samuel. I'm glad you like it. My question, is there any scanner to show us unusual volume for options on futures or FX, as we have one or two on equity, or to show you if the options have been bought or sold? Thank you kindly, Samuel. Well, we get this question every once in a while, Samuel. It's a good one because you're right. We talk about a lot of unusual activity on the site and on this show and on the network. It's kind of our bread and butter. Less so on the futures options side. And that's an issue I've been trying to address for quite a while, trying to find good sources of information on exactly what you're talking about, software scanners and things that will do that. And what we found, what we use a lot now when it comes to that stuff is a platform, a service called Quick Strike. That's QUIK. STRIKE. You can find it. If you just search for that, you should find it on Google. It's also available, a free trial available on the CME Group website, so you can find it there. There's a great free trial for a lot of you retail guys out there. And it does a lot of this stuff. It will search for and scan for it. It'll give you open interest changes. And we've been working with them to make some tweaks to it to make it even more user-friendly for a lot of you guys. Like, they just added the functionality to be able to to be able to scan for changes in open interest across a certain time period. So if you want to see how much open interest changed on a strike across the last week or a month or whatever dates, you can do that now. So it's pretty cool stuff, and it's pretty much, I like their tagline, it's pretty much essentially is all the stuff you can't find all in one place. And it really is true. It really does do a lot of that stuff. So if you're looking for unusual activity information on the futures option side of the fence, that's pretty much the best game in town right now. That said, Andrew, if you have other recommendations, or Alex, feel free to unleash them on our friend Samuel here. Going once? Going twice?
No, the tool you described sounds incredibly valuable.
Yeah, you check it out. It's actually available for free on the CME website. It's a pretty cool tool. We use it quite a bit, particularly when we do our futures options roundtable and the long and short of futures options program here on the network. So we use those a lot for those programs. All right, great questions, everybody. And now we're going to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the show where we tell you what we're watching for the rest of this week, and it is indeed a holiday weekend. So bear that in mind, listeners. Decay going to start coming out hard pretty soon, though perhaps not as aggressive as in years past because there is so much going on from a macro perspective. Uncle Mike, I think we'll start with you. What are you watching for the rest of this week, sir?
All right, so what I'm watching, in the markets right now, the S&P seems to be magnetically attached to this 2,000 level. So curious to see over the Labor Day weekend when the summer doldrums officially end and we're into the unofficial fall season, what the market reacts to. Tuesday, I think, is going to be a pretty big day in a lot of ways. And then that is pretty much it. And then in terms of what we have going on at RCM, for the time being, folks, we would like to just tell you to go to our website, continue to subscribe to our newsletters, and we'll have more to come in the coming weeks.
All right, thank you for that, Uncle Mike. And Mr. Rock Lobster, what are you watching for the rest of this holiday week?
Watching just, how the options are decaying, mostly. And, if this Russian thing actually pans out, I think the stocks aren't moving. It's still 5% realized vol. Stocks aren't moving, and yet volatility is not finding that next leg down. So I find it all very curious. And I thought, with the market, with a lot of really kind of good feelings going on, if we wouldn't see that 10 handle in the VIX, and it just hasn't quite gotten there yet. And I think old Vladimir Putin is really keeping the vol up on this. Well, I think that is keeping the volatility up. They're not letting those vol futures really dip too far below 13. So just nobody wants to sell them there. So that's what I'm looking at.
And Mr. Viceroy, take us home. What are you watching for the rest of this week, sir?
Like Andrew, looking at the VIX and geopolitical events. And Mike and I have become economists, looking at the 10-year and the German 10-year, which a week ago was trading a 1 yield, is now trading in 8.90. So money is running into the sovereigns. Today it looked like it was leaving the European stock market. To Andrew's point, with all the sanctions, is it going to have a big impact on us? Probably not, but it's going to have a dramatic impact on Europe. We don't sell that much into Europe and into Russia. So, yeah, the politics are important, but from an economic standpoint, and as Andrew said, so far this continues to be a yawn.
We'll see if we end the week on a yawn, but unfortunately that's going to end this show. Listeners, that's all the time we have. But before we go, really quickly, before we head off to enjoy the Labor Day holiday here in the States, let's check in with each of my cohorts here on the All-Star panel, see what they have cooking that may interest you. And Mr. Viceroy, what's coming down the pike over there in the land of Options Express?
I'll showcase 3 events. Wednesday, September 3rd, Mike Zaremski's going to do new customer orientation for futures customers at OX. And futures options are an amazingly quickly growing business. Thursday the 4th, I'm going to do the hub after the close. Didn't do a lot of hub for the last couple months, but now that we're expanding it again, Saturday the 6th, Jimmy Rosanna and the crew will be live from San Diego, doing their kind of 3/4 of a day Saturday event. If you can make it out, we'd love to see you in San Diego. If you can't, the event is simulcast on the site. Come to optionsexpress.com. All the educational events are free, and for the live events, you can actually participate as if you were there.
And Mr. Andrew, take us home. What's coming down the pike over there at the pit?
We have Two webinars coming up, September 17th at 6:30 Eastern and October 4th. So what the first one will be is a free one, kind of an intro to the volatility, VIX and volatility in general, and then a paid webinar. I think we're going to be charging around $47 for it, to actually how to use all that learning we just gave you in the first webinar to basically understand really how you use the vol products the right way. Mostly like VXX and UVXY XIV. So that will be a paid webinar. So you go to the free one, and then you learn some of the stuff you learn. Take some of the stuff you learn on the 17th, and you can apply it to what we will be teaching on October 4th. It'll be $46. And what is that? That is only a couple of ticks on a boo-boo that you might make trading, which we will be happy to save you the money on.
Yes, all those guys out there long thousands of shares of Apple from $1, they could just sell one share, and they're good.
Right. That's another thing I just thought a little late. He's like, I know he doesn't want to sell all his stock, but, he's got so much dollar value built up in there. If he sells some of it and just buys, lots of one-year calls and maybe, increases his delta by 25%, then he can start getting a little bit more, if he still wants to hold it, there's nothing like peeling off, adding a little bit of delta as time goes on, and then you really can get some, that should give you quite a bit of appreciation.
Yeah, that means that they have to get over their psychological hurdle of selling the underlying. So many people are just die-hard averse to that.
Yeah,
right.
When I was a broker many years ago at Merrill Lynch, I had clients who told me they would rather than pay tax, take the equivalent amount of the tax, put it in 50s and 100s, and throw it off a roof rather than give it to the government. And they just would never sell. They would never sell.
I've seen it, and then I've also seen a lot of those dollars go to zero. But you see the taxes.
All right, good stuff, listeners. And since Alex did mention live events, I want to bring up again, we do finally have a location for that live show we're going to be doing on September 11th, which is a Thursday. It's going to be at Benny's Chop House here in Chicago, 444 North Wabash at about 4 p.m. It's going to kick off. I have no idea how big the space is, so get over there if you can and secure your spot, and maybe let us know you're going to come over, shoot us over on the website, an email or Facebook or tweet, something along those lines. You don't have to reserve. It's just nice for us to know how many people are coming. And, of course, if you've ever been to any of our live events, they're pretty fun. They get a little bit of a rowdy and all kinds of fun stuff. If you heard this show many times, imagine it live and longer with some guests and perhaps a few beverages, and you've got a mega episode of the Option Blog in store for you. So if you're going to be in and around the Chicagoland area on Thursday, September 11th, we'd love to see you over there at Benny's Chop House. No charge unless you want to buy some drinks or food, then by all means go crazy. That's all on Andrew, by the way. Okay, hopefully we'll see you then. And, of course, in between now and then, we'll see you next time right here on the good old Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.